Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we have a textbook Bitcoin breakout on our hands. And this is driven by a couple of things. For one, we've been talking about Bitcoin's Q4 seasonality for quite a while now, and there's a reason why they call it October. And this year seems to be following the same trend Bitcoin has historically, where Octobers tend to be green. And if October is green and the S&P 500 is doing well and is in price discovery, we were talking about how it would be awesome if Bitcoin could stop chopping around and follow the S&P 500 into price discovery already. And as of right now, we are seeing early signs of Bitcoin starting to follow the S&P 500 to the upside. Another main driver for this price action is Trump pulling away in the election odds, at least if you look at Polymarket. And I know there's a lot of people that disagree with Polymarket, but if crypto people look at it, it's going to have a huge impact on crypto prices. And Trump has started pulling away quite aggressively this week. So it's no surprise that we're seeing front running of the election now that it's only 17 days away and Trump is leading by this wide of a margin based on Polymarket. And it seems as though the majority of investors are front-running this election via the Bitcoin spot ETFs, which have finally officially crossed 20 billion and have seen some insane inflows over the past 5 days or so. And these are probably the largest inflows we've seen since about January to March of this year, when Bitcoin had that incredible run to 74K. And we also have the total AUM for these ETFs in price discovery as well, as they gobble up more and more Bitcoin out of circulation. And all of these factors are good arguments for the shortened cycle scenario where Bitcoin sees a breakout within the next month or so and has a green November and rallies into the end of the year. But as I'm sure you're all well aware by now, we never go all in on one outcome on this channel. And I'm also seeing a lot of warning signs that could still be pointing towards this normal cycle scenario. And it isn't all just sunshine and rainbows for Bitcoin. For one, we're seeing a huge increase in open interest soaring to 1-year highs. And every single time we've seen open interest in green here reach these levels, we've seen a large correction of at least 20%. So all of that leverage gets washed out of the market. And right now we're at the same level of open interest that we saw around the 74K top in March, except the price hasn't even crossed 70,000 yet. And this doesn't mean that we have to have an imminent huge market crash, but it does likely mean that we're overdue for a correction and pullback, and that the market has gotten quite overheated over the past few weeks or so. We've also been discussing how Bitcoin's Q4 seasonality is kind of a double-edged sword, where October is almost always green, but November is usually what ends up being the deciding factor for the trend. In the Q4s where November was green, we saw major continuation into the end of the year, but there have also been plenty of times where October was green, just like we had this year so far, but November ended up being a large reversal and price ended up rolling over aggressively. And perhaps that also aligns with the amount of leverage we're seeing in the system right now, just waiting to be washed out in the next few weeks. And that perhaps brings us to my final and biggest concern for Bitcoin right now, and that's the risk of a exit pump because of the rally we're continuing to see in the US dollar index. Yes, it is facing resistance right now, and we would love to see it roll over, but it hasn't done that quite yet. And the US dollar index is important because it has a huge impact on global liquidity, which we know is important for Bitcoin. So it's no coincidence that ever since the US dollar index has been rallying, global liquidity has been going down, and we're likely not going to see global liquidity skyrocket until we see an aggressive fall in the US dollar index. And all of Bitcoin's incredible rallies historically have required huge increases in global liquidity and huge amounts of supply getting added to the money in circulation by central banks. And even though we're expecting that over the next few months, we haven't seen that begin quite yet. And this is actually a very rare combination for Bitcoin and the DXY to be going up together, and usually it means that one of them is going to roll over aggressively quite soon, because historically they've had a very strong inverse correlation where large drops in the US dollar index result in large mania phases from Bitcoin. Right now, we're seeing them both increasing slightly. We also want to see the dollar index roll over if we're going to see those huge alt seasons that everybody's waiting for. But as of right now, we're not seeing that rollover from the dollar index quite yet, which does make me a little bit concerned about this Bitcoin rally. And we know the US dollar index is driven by the monetary policy expectations from the Federal Reserve. So these 25 basis point rate cuts in November, December, and January are not quite cutting it for the market, which is why we're still seeing this rally in the US dollar index. And unless we see some more aggressive rate cuts being priced in, or the Fed announcing they're no longer going to continue with quantitative tightening and reducing their balance sheet in yellow here, and instead they're going to switch to quantitative easing, it's likely we're not going to see the US dollar index roll over in the short term, and we're still going to have to wait a while longer for that to be announced. And we know that historically, rate cuts have not been enough to save markets after a hiking cycle, and it's QE that's required to step in and really stimulate the economy and markets. So we'll continue to monitor this quite closely. But as of right now, still no announcement from the Federal Reserve that they're going to be cutting rates more aggressively or that they're going to be going back to QE anytime soon. But of course, this could change at the FOMC meeting that we have coming up in November. And this is why I think it's so easy to make an argument for both the shortened cycle scenario and the normal cycle scenario. I'm still leaning towards the normal cycle scenario because I think there's a lot of risk with the election being a sell the news event, especially if the market keeps rallying so aggressively into it and we continue to see this huge increase in open interest as we approach the election. So it's probably going to come down to the election result and the FOMC meeting we have on the 7th of November. That's going to decide what Bitcoin is going to end up doing in November of Q4. And based on that, how that ends up going, that's likely going to decide whether we have our normal cycle scenario where we sell off in November, or if we see Bitcoin continue its trend higher in the shortened cycle scenario with a rally in November because the Fed comes out and announces QE or something of that sort. And the way I'm handling this is pretty straightforward. If we can get a weekly close above 72,000, then I would say it's full on shortened cycle scenario and Bitcoin is going to break out significantly higher in November. But then a weekly close below 61.5K would confirm this as a fake out, and it's likely that we're getting the normal cycle scenario where we have one last washout before the Fed restarts QE and before Bitcoin can actually start rallying its way higher. But for now, as long as we're in the middle here in no man's land, we have to be optimistic in the short term because this is still a breakout. And as long as this breakout holds, it makes sense to expect short-term upside, at least over the next 17 days or so as we approach the election and the market continues to front-run the election result via these ETF inflows. And I like to keep my portfolio management very simple. As I've said many times, I've done almost nothing in this fair value range. I'm not interested in buying any more unless we go below 50K. And depending on the backdrop and whether or not the Fed has restarted QE and what the economic situation is looking like, that's what I'll use to decide whether I want to take profits over here in the expensive region or wait until the very expensive region to start taking profits. But it's a little bit too early for me to decide on that because I have no idea what the Fed is going to announce in their November FOMC meeting. And for now, I'm still open to lower prices being revisited, but I know it's not a guarantee by any means. Now let's go ahead and get to the economic data because this is going to be the main driver of what the Fed announces in their November FOMC meeting. We still have Trueflation showing inflation slightly increasing over the past few weeks. Hopefully we don't see that carry over to CPI or core CPI because that could have a huge impact on the amount of rate cuts the Fed will be able to do. If we take a look at the labor market, we did see initial jobless claims go down this week compared to last week's reading, so no signs of imminent recession panic in the labor market quite yet. And as long as we have initial jobless claims below 260,000, nothing really to worry about in the short term. And as always, we're still well below that recession start average of 360,000. Similar data with continuing jobless claims, nothing to worry about quite yet in the short term. And we are going to get an update to the unemployment rate in November as well, which will also be a huge driver of what the market ends up pricing in for Fed rate cut expectations. So we'll monitor that closely. Also, as for real GDP, still quite positive, still well above 3%, and no signs of recession quite yet, continuing the trend of this economy just carrying on without it falling into recession in the short term. And we have the federal government to thank for that positive GDP that we've had over the past 2 years. The final numbers for the fiscal year of 2024 are $1.8 trillion in deficit, which officially puts us higher than 2023 and 2022. And this trend looks to only be increasing year over year, which means we're likely only going to see an increase in this US government debt parabola, and eventually that debt will have to get monetized and carry over into the money supply, which is why we see the insane correlation between US national debt and the S&P 500, and why we've seen such an incredible trend in the S&P 500 over the past few decades. And that's why we remain bullish on fixed supply assets like Bitcoin, because it will likely benefit the most from currency debasement and from easing coming from central banks around the world. And this still looks like one huge reaccumulation pattern to me. Are we going to break out in December after a big November correction like the normal cycle scenario states, or are we going to break out sooner? Nobody knows for sure, but we're going to monitor the economic data and monitor the charts to see what ends up happening. But regardless, with this election around the corner and with a very pivotal FOMC in November, we can probably expect a lot of volatility and excitement during the next few weeks. So for now, we'll monitor this Bitcoin breakout and see if we're going to see that continuation higher. Let me know what you expect. Is this a real breakout that's going to be able to continue higher in the short term? Or is this going to result in a painful fake out that ends up trapping a lot of investors, especially all of these people piling in with leverage and adding to this open interest? Would love to know what you expect, but as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.